day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 19th of November, and we're right now just approaching 4:15 in the afternoon. So as you can see, the market mixed today. Now, I was looking for a down day today, a Tuesday up, a Monday up, a Tuesday down. I got what I wanted in two of the markets. I lost what I wanted in two of the others. I'll call it a flip. We're getting a short covering rally, could have a little more momentum to it in the gold and the silver market. The dollar up a little bit is a mixed bag in the currencies. Tonight they did have the debate, and as I'm reading the results on Sky News, it appears that Mr. Johnson's got about a 2% edge on the polls of the debate. So that's the Brexit people coming out and talking, but we're a long ways from December 12th when the election is. Hit hard today in the energies. The market is very concerned that what China's asking for, the U.S. may not deliver. And it appears that what China seems to be headed for is asking that the tariffs that have been put on since May, when the trade talks first, we thought they were going to go ahead and they broke down, that those tariffs come off completely there, the additional tariffs, and the ones that were in place prior to that a formula be worked to take them off. The dilemma with all that is, how do you get to a phase two? And I don't even know what phase one is. None of us do. We don't know how much agriculture is being bought, how they're going to go about it. I have heard not a word on intellectual property, forced transfers, subsidies, none of that. So I don't know what the Trump administration is doing. The president's playing it very close to the vest, saying he'll only do a deal that's right for America. Otherwise, the tariffs are going on come December 15th. Which message do you want to believe with it is the problem. As we come and we look at the S&P, for the week, the market's basically unchanged. It's up a quarter point. It's only the second day of the week, though. When we look at how this rally has gone, it's been the never-ending rally. I think you'd agree with that, and breaks are well contained. The pattern is still one of higher lows and higher highs. Yes, the market made the highest high of the move and closed lower today, and eventually it could cause a trade top, but it's not here on this chart picture yet. The support of the market, I told you yesterday, I thought this 18-day average of closes when it's going to get over this last swing line, and it did it. It did just as I was assuming it would. Now I look for it to march higher, about 6-7 points a day on average. We'll see if it does that. And what that means is if the market breaks from here, I'm looking for support, say the 3082 level versus the 18-day average of closes. In terms of resistance, other than at the very beginning of the month, and this is the 18th, when you hit the Bollinger Bands, you've made higher highs, but you've stayed away from them. And all that means is the market is staying within the algorithm, and it is still trending itself very nicely higher. As we go to the slow stochastics, until they turn down, and all they're doing is waffling right here back and forth, it means that until they turn down, pullbacks in the market are probably being bought by the pros. Excuse me. In the NASDAQ, got pretty close to that upper Bollinger Band, couldn't quite get there. The embedded readings in place. Certainly the pattern, higher lows, higher highs. Everything's still bullish on this market. It will change if you lose that embedded reading, and until that occurs, the resistance is the upper Bollinger Band. Same thing in the Dow. Now the Dow today got up as high as 28,128, and as you can see, pretty sizable resistance off of that. Momentum's trying to turn down a little bit. I'm looking for this 18-day average of 27,476 to very shortly be making a run at this lower band. If you look at the market is moving on that average about 50, 60 points a day. So when I add that in, it's going to probably be right in that neighborhood when it reopens tonight. And we'll see what that means to the marketplace. But until today's high is taken out with an outside day down, you've got the makings of a resistance area. In the Russell, well, the Russell acted good today. And what do I mean by good? Maybe we should take a look at that. This is Friday's action. Now, if you take a look at the range, 1600.8 to 1588.80, you had yesterday a day where the market took out the high and low, closed lower on the day. Today, you bust through that high. What's the importance? When you have an outside day down and you take out that high, the market often is sending a signal that a reversal of what it did the day before is about to hit you. And could that reversal kick up to the upper Bollinger Band is what I'm looking at right now. We'll see. The market still has the swing line down, the bias up, and we've been in a corrective mode where we're still, at this point, in an overbought condition. I consider when either of the numbers of the slow stochastic are over 70 to be overbought. If they both go over 80 and go sideways, that changes that pattern. You haven't done that. In the cash VIX, notice how the momentum is narrowing in, and you're just hugging now this 18-day average. I call that the line in the sand, and that's what you're doing. Is the trend down? It still is. You've got divergence with momentum picking up, trend down, support at 1201. The pros, I still think if the market hit the lower Bollinger Band, they'll write puts, looking for a bounce back to that 18-day average. It's now no longer a big play, and that's the danger. It's a lot easier as you get a rally like that or you get a big break like you did down here to write those puts and be looking for that bounce in the marketplace. So when it narrows this much, I have my doubts that the pros will be that aggressive. In the bond market, we're getting a rally with higher lows, higher highs that's been in place, but now the market is settling over the 18-day average. Resistance is 159.23, the 100-day average of closes. If that's cleared, you have the potential to get back to the upper Bollinger Band, but I would think you'd need something out of China or a scare in the market to do that. We'll see. Momentum up, bias up, you're over the 18-day average, trend up. Resistance 159.23, a couple of points higher than this. 10-year note, trend up, higher lows, higher highs, momentum up, bias up, bigger resistance 129.23. The really strong resistance is up at 130.07. Again, you need something important to get there. When we get to TLT is in an uptrend. Higher lows, higher highs. First objective, the 100-day average at 139.25. You hit 139.24. The market stopped there. Okay, I can live with that. It's pretty close to the resistance point. That is not a trend change. That's just where I think some pros took some cash off the table and they want to see if the market can punch through. And you'll say it's only a penny or two, but when you're trading huge numbers, it's not what you think it is. In the dollar index, we had a bounce off the 100-day average back to the 18. So this is how you looked yesterday, and I would have probably said if you bust through here, you could be going to this low, or if you want to get a bounce, the 18 is probably going to offer the first resistance, and that's what the market is doing. Now, if you can now get through 97.55, you'd get a pattern of lower highs, lower lows, and that could very well put this number into play. Where are we from here? Don't know. You're just sort of hanging right at that 18-day average. You closed over it, actually, so I'm going to call the market neutral going home. In the eurocurrency, it's the mirror image, the flip way, obviously. Take out the 111.09.5, and you could get the higher lows, the higher high, putting into play the resistance up here. It's going to be a little whippy. You're now hanging around that 18-day average, and that's often where the trends develop from. In the British pound, the first challenge of the upper Bollinger Band stalled the market yesterday, pulling back today from that, as you can see. This is now sideways action, support back at the 128.88 level. I'm guessing that's where the pros might be looking to actually accumulate some longs with stops under the low that was right over here. In the Japanese yen, the pattern is right now an uptrend. Higher lows, higher highs, closed over the 18-day average. The risk to the longs is not to get back under 91.81.5. In fact, if you did that right away and didn't take out this high first, you could have lower highs, lower lows. So I'm guessing that the pros are defending the 18-day average right now, that they have the swing line pointing up. Bitcoin, I think the pros are covering their shorts right here, right now. Now, I was watching the the SEC commissioner talk about what they're seeing, if you will, for Bitcoin and so on. I still walk away. There's no question that I think the government idealizes, enjoys what the technology of blockchain can do. I am not convinced that they're liking Bitcoins themselves. They've made this a commodity, they understand it. But I think if you take it further down the road, there's still all the questions about money laundering, who owns it, what is it. I think there's many questions there. In the Jan Brent versus WTI crude, the market's making a statement. It's holding this 100-day average and trying to poke to the upside. Until you get through yesterday's number on the down, closing back under the 530 level, it's looking more and more like Brent wants to gain on the WTI. They were both down today, but it's a question of which one falls more. Momentum's down. You went to the upper Bollinger Band, failed. You did that back 2 days ago. Proved it again yesterday, and bang, just what we talk about, those first challenges. You didn't even hold today when you came back down. And you can see yesterday you were down pretty good, finishing at 62.44, about 60 over the 18-day average. If you take out 61.78, you break the uptrend. If you break the uptrend, you're looking for where the support is. 100-day average to the lower band. Momentum just turned down, but there's not a trend down. You've left an uptrend. That's a difference. Same thing in January WTI. Notice how the market went over here and held in that general zone, the 100-day average. Now, if you accelerate from here, the lower Bollinger Band comes in play. There's too much crude oil. Period. You've got Russia now telling the news press through Reuters, I read a report, that they're not in line for another big production cut. That doesn't mean they won't do what was there, but they're not offering to cut more. And that adds potential problems to the market. OPEC is not doing the job of holding together price structure. In the gasoline market, you've left an uptrend. Now you've got a market that did this. Here's a big outside day to the upside. You cannot, in my opinion, take out the low of an outside day without doing serious damage to the chart. You did it yesterday. That puts into play the lower Bollinger Band, and that's what the market seems to be driving towards. And in nat gas, this warmer weather, this was the first run for the winter, and it wasn't even winter. It was so strange to get that terrible weather. It was snow in Chicago at that time of the year, Thanksgiving. We didn't even have Thanksgiving in the Chicago area. And then the market's given literally that whole rally back up, let it restructure itself. So putting it all together, I did a report today. We're at an important time in the grain market. And what do I mean by important? To me, what's important is harvest is coming to an end. We've got a Chinese potential deal staring us in the face. Where does the corn market go with all this? Is it coming down, going up? Where is it? I did seasonal charts, price counts, weekly charts, daily charts, and it's all on the corn market this time. And I haven't done one of these all year. So this gives you an idea as to what I'm seeing coming right on through. I'll follow it up with meal and oil reports and the like. If you'd like to take a look at it, just go to our website at www.iraepstein.com. Under research, you'll see my reports. Click it, just fill out the info, and you'll be viewing it in 1 second. It's pretty simple. If you have questions about it, call my staff. They'll help you right through it. You can also click up here to get right to that page if you're watching me on YouTube. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.